what makes emerging markets interesting from our point of view in this process is if you think about emerging markets as a whole, kind of a misnomer, of course, but if you were to think about it this way, basically it's a large group of dynamic economies, many of them which have a heterogeneous approach to exchange rates, fiscal policy, monetary policy. Many of them, and I should say importantly, for many of them, they have complicated political economies which drive many of these features. Those are, for most Western investors, can be somewhat opaque and confusing and complicated. And specifically because of that confusion and complication, oftentimes you get mispricings of those assets versus their potential recovery value. And in that effectively lies our business.
Right. And you touch on it. There are, I guess these touch points where points of crisis, in fact, in these economies. So, and then the more idiosyncratic, specific things. But what is your entry point here? Your mandate, it sounds like, is completely global, right? But
global emerging markets, yes.
Yeah, yeah. But what do you look for in terms of an entry point?
Well, we do sovereigns and corporates.
Okay.
So typically, typically with respect to either a sovereign or corporate, it's typically when there's been some kind of event that's created an event shock of some kind, that oftentimes, especially when we speak about sovereigns, triggers a wave of capital outflows, which often, and usually in those situations, we want to be liquidity providers to those people, obviously at prices that we think significantly underestimate the recovery potential of those assets.